That same old work, same old life, same old tricks, and the same old day. These precious days. Oh, I got hopes to pay, I got thanks to mail, charts to pay, I got seeds to sell. I'm gonna build in your boat. Good morning, everybody. Happy Friday. Hey, Genzi, good to see you. Hey, we've been making some really good headway on that AMD trade. I think you'll really like it. Just seeing how the market moves around, just incredible. But there's a lot of things going on in our pre-market tips that seems like so many things are just playing out, you know. Exciting times. That's where I'm headed for. Got the stars, they got my way. Still into the light. Hey, I'm gonna build me a boat. Really soon that should be done. Better from the noble land. Let the chips fall, and they will design. Gonna build me a boat. Really soon that should be done. Better from the noble land. Let the chips fall, and they For those who are watching, I just entered a trade on the S&P. At a short-term target, looking for that unfilled opening gap, maybe just slightly below the prior session's low. Now, some traders will look at this and sorry, Jimmy. Some traders will look at this and there's gonna be, where they anticipate what they call what do they call that? Liquidity trap. Okay, where price kind of dips below the Globex low, dips below the prior session's low. Once we get into that area pocket of points, we're going to have some news around why price would come and fill that up. Okay. So look at the light volume. It's certainly possible. Okay. And that's why we're taking a poke at the short. Just a couple of micros. We have just $100 risk on the trade. As you can see where my stop loss is, right about that 69.43. I took a fair value gap entry. So right now you'd have about $135 risk if you took 2 micros. Okay. There's another opportunity to take a breakout trade. And that's where I've already got a trade set up to add on 2 more micros. And looking at a short-term profit target about 69.11. Okay.
And we want to just put on our chart, where is that prior session's gap fill? Okay. Now on the time tick-based chart, you're not seeing the picture why I'm so excited about this. Okay. But on a time-based chart, you can see the Asian session and then the overlap, the Asian and London session, and now we're in the London session. Okay, so accumulation, manipulation. So this is where the manipulation phase gets a little tricky, and then we'll look for the distribution. Okay, now I often trade better in the distribution phase rather than the accumulation. Market's going sideways. That's tough. Okay, because you're not getting any follow through. We kind of had that yesterday, a little bit of accumulation before we got the drop at the end of the day. But this manipulation phase is getting everybody on the wrong side of the market. Okay, they're kind of manipulating, the market's manipulating people to think bearish. Okay. And over this week, we have seen this structure and pattern play out so well in the using the overnight Asian, London, and New York session. Okay, and it's really a tell all. Okay, because when we fake left and go right. Okay, same thing down here. We had the Asian session sideways, faked left, went right. Okay, regardless of the news and things that are out there, that sideways accumulation, okay? And sometimes we go a little deeper. And this is one of those accumulation phases, some notes that we had earlier where you can get a little messed up, okay? But it's still the same pattern. And you combine it with other things, it's just been playing out like clockwork. And um, so the little video I posted in our Discord about the AMD trade. Go back and look at it. It's very simple because of what we've done in here at the Market Institution is we've shown a lot of the pictures on the price chart, and that's what we're looking at playing out. Now, pictures are also, here's my adding on 2 micros, and then at that point, I will adjust my risk down, all 4 micros down to 69.36, keeping my risk right about that $100, a little more, probably a little bit more than $100, but not big rent. Okay. This is the unfilled gap area, 69.15, and we'll look for a little bit of buyers coming in at 69.11. Now we haven't started our our morning session yet. I'm just kind of showing you what things are unfolding. Now, keep in mind, we utilize a time-based chart because that's what a lot of people use, okay? And it gave a better picture of the environment, okay? We utilize a tick-based chart to help us with the timing of executing on a trade. It's all the same chart. But see, we're also noticing, and there's a lot fewer bars. We got a 3,000 tick. That means every time 3,000 transactions take place, it forms a bar. So we're seeing that there's a lot of low volume, okay? And correlate that with what's going on over here with the Dow 30 stocks. The only thing is China came out last night and said, hey, NVIDIA, or everybody get ready for the new chips, and we're going to use what is the chips that we said we weren't going to use, okay? So China came out and said that they to prepare to use that. And I'm just going to scroll back here because we saw a lot of big pre-market activity from that. But again, they're kind of faking left. So NVIDIA's up because people are paying close attention to the news. And it's taking me just a little bit to scroll down through all of this to show you when China came out and announced that. I just want to give you at the whole time, the Japanese yen came out and they increased their overnight, or sorry, they increased their interest rates by three quarters of a point. Okay. Everybody was expecting a full point. The Bank of Japan, okay, that came out. I mean, there's a lot of stuff that's gonna play out that's actually pretty bullish for the market. But right now, people are just checking out the charts. They're thinking very bearish. All right, come on. Where are you? All right, I may not be able to find it here. I have to do a search, but verify information. We also saw that, with Intel's earnings that came out yesterday. Um, Boy, I wish I could find that. It was a really good article about the China chips. I mean, there's a lot of drama in potentially how the media spends that drama. China Bank. It's like we talked about earlier, fake left and go right. Yeah. At any rate, for those that I want to bring back up our pre-market routine so you can get or pre-market tips so you can get an idea of what is happening. Bank of Japan and a special shout out to what we see here, the Financial Juice, uh, just amazing. I mean, this is a Bloomberg terminal, uh, much lower priced Bloomberg terminal. Okay, and you can certainly modify a lot of the searches. Okay, but what an amazing resource. Okay, if you like getting this information, you'll see that the blue dots, that's just the breaking news. It's released when it's available. And then 15 on the top, on the quarter hour, you see that the FX Street, China Post, these are just some that I watch, CNBC, Market Watch, Benzinga. You see that always on the quarter hour is when they release their headlines. Okay. But if you want to get the headlines first, I mean, they write things up pretty quickly based off of the breaking news, and then they go and create um, the little clips for, like here, look at right on the top of the hour, quarter, three quarters. Okay. That's when all those things come out. So, anyways, I'm still digging through trying to find the article to back up what I was talking about with China getting prepared. Uh, there's also potentially a Bank of England rate that they might want to talk about. At any rate, great resource there. But okay. Oh, here it is. China tells biggest tech firms they can prep for NVIDIA H200 orders. Okay. So NVIDIA and Apple are some of the largest market cap weighted stocks that we have out there. And because the S&P, NASDAQ, and Russell are market cap weighted stocks, we got to pay attention to the largest market cap and how they impact things there. All right. Let me bring this up. I want to keep this up on the side here. It's not going to, can't fit it all on there, but yeah, I gotta figure out a way to get it all in there. There's a ton of information that we have in there. Some of it is just an opinion. Very interesting time in our history. The chart patterns have really not changed from what the old folks, back in the early 1900s, late 1800s, very late 1800s, early 1900s. They put a lot of stuff together for us, and the same patterns and charts are still there. So, all right, we will get started. Oh, we get to start now. As you can tell, we really, at the Market Institution, we really like to work on the picture on the price chart. We like to set the trades up ahead of time and show you why we are putting things together. Now, you don't have to take a lot of risk. I know there's several folks out there that do trade and utilize prop accounts. And in the proprietary accounts, um, you want to take little risk, okay? Because you want to get those funded accounts and everything up and going, okay? So I'm not going to be, loading up. You're probably not going to see, 30, $40,000 trades and things like that, but we're going to show you the real aspect of this. Because not all of us are prepared for a $20,000 or $10,000, $6,000 trade. I mean, our mind gets blown off of that, and then all of a sudden the next day we blow up our accounts. Been there, done that, got the t-shirt, right? Okay. One more, I'll do this a little bit later, but I wanted to give a shout out to Miss Faye out there. She's been just a rock star at trading the natural gas. This is where she was telling everybody, look at the short. Well, she didn't tell everybody, she does it quietly, but this is where she took a short trade on that gas yesterday, and by the end of the session, had done really well. So I just wanted to give her a shout out, doing a fantastic job putting those things together. All right. So we have the natural gas out. For anybody that's involved with the candle range theory, you're going to be looking at the daily chart. Okay. And right now, those candle range theory folks are looking at nat gas, especially on the daily chart, as a potential move back down. Okay. Now, along with that, okay, and in our write-ups this morning and in our pre-market tips, okay, we've got a daily chart on the nat gas. Will be attracting the candle range theory, CRT traders. If you want to look that up on YouTube and things like that, it's a good resource. Okay, this is a very positive or a good potential trade back to the downside. Okay, but we're not going to use the large time frame because it's just a little too much risk, dollar risk. Okay, so what I've suggested is that you turn down the time frame. Okay, so we went down to a 60-minute. We found a fair value gap inside or just above here. Okay, between 3.754, 3.904. Okay, and even on the smaller 5-minute chart at the origin of this drop, there still may be some unfilled orders. And we also have our leg base group of candles. Okay, so as price starts to approach these levels, we'll start off with a small position. Okay, my ultimate stop loss is going to be up at 3.694. Okay, my first entry is sell short. 1 micro will be about 3.640. 3.4, we'll see, 3.640. Now, also regarding natural gas, okay, and then 664, and then we'll have our stop loss up once we get filled. And regarding natural gas, there's a lot of hype around the potential of a big winter storm coming through. Okay. That big winter storm, and if you look at when they were planning that propaganda, okay, it was about 5 or 6 days ago. Okay. Whether it was manufactured or whatever, they were looking to push natural gas prices higher. Okay. Now, this is accumulation. They were building supply, pushing prices up. Okay. Now, what happens once the storm is there? Okay. They start using that supply, or maybe the storm hasn't arrived or doesn't arrive. After all, it is kind of weather, right? So they've been accumulating massive in front of that potential storm. Okay. They've got a huge supply and they're hoping everybody's going to utilize that. And the media has been propping that thing up as well. You've probably seen a lot of sales in the stores as everybody's getting ready. And right about, I think right around this time too, there was I can't verify it, but I've seen a lot of pictures on X about the big winter storm they just had in Russia, the way up north. And that was an amazing looking storm. I mean, it was tens of feet of snow in just a short period of time. So, anyways, right now in the US, the hype with the big winter storm coming, whether it comes or not, you can see they're already starting to prepare for it. Everything's in the price charts ahead of time. Now, if they have this huge pile of supply and the storm doesn't manifest, but kind of a whimper instead of a big roar, okay, prices are going to drop because they have too much supply and not the demand. Okay. So we're going to play the news, understand what's going on outside the price chart, as well as what is going on with the price chart. Okay. All right. So natural gas is set up. We have the trade. We're looking, let me just reiterate that. Looking for selling short 1 micro, 3.640. I have a second micro that I'm going to be looking to sell short at 3.664. And with each entry, I'm going to manage my risk by having my protective stop loss above 3 point, right around that 3.70. Okay. Now, let's move on. Crude oil. Holy smokes, what happened with crude? All right, so that's a big move. All right, now daily chart on crude oil is 2.07 for the daily ATR, and we're about 1.56. So we're pushing the boundaries of looking for the bull trap or the bear trap. Okay. Now, based on the picture over here, you can see that the crude oil has uh, had that accumulation, and we're now in that manipulation, potentially looking at that double top area. Okay. Sorry, missing that. Oh, okay, super. Thank you, team. Team's working overtime behind the scenes. What I do want to also put out there is we do have the pre-market routine, things that I'm going through right now, how we set up our day and put things together. Okay. We're going to have that class on February 15th. We've discounted the price because I feel it's so important. The team feels it's really important that everybody should really learn how we gather the information. Okay. This will be a live Zoom session. It'll be covered over 2 sessions. So we have two 90-minute sessions as we go through it and give you a lot of details. Okay. So check that out. You can see it on X and get more information. Now, also looking for the short on crude oil. And as price came back, we're in that manipulation phase. Notice heating oil is taking a big price movement down as well. Okay. Wow, that's not a very clear picture there, but it does show some serious price rejection area. All right, so I'm going to use the bottom of that candle, 6105, without taking a lot of time to digest that. Kind of take this range, stop loss 6170. Let's move back over. Oh, look at that. Just went right into that area. Okay. All right, so it's as it went into the area, let's look for where we might have an opportunity to get into that. We have the Globex high, which it broke. We don't have to take a large position because we're looking at, and we still got about 2 minutes left to finish that candle. And we'll use a stop loss at the high of that wick, 61.21. And we're really close. So I'm going to step in there. I'm going to start with 2 micros. I'm going to sell at the market.
Order filled.
And place my stop at 61.21. Notice $60 risk. Okay. In every trade you take, make sure that you visually see, say it out loud, what is the risk on your trade? Because this is the time you say, oh man, that was $300. I don't want to risk that. Okay. And when you don't want to risk that, then you can size down your position without taking a big hit or bringing in the drama. Okay. I believe we just got hit on that gas. Okay. We got 1 micro. Let's get our stop loss. I'm gonna set it up for 2 because if price does come up and stop us out, we'll have 2 micros at that point. 3.694. Into 2. Okay, so we're set there. We may be adding on 1 more micro, yeah, up a little bit higher. Right now, I'm just starting with 1. We've got a lot of downside potential. Okay. Remember, contract rollover is happening soon. Trading the H contract right now instead of the G. The H contract has more volume than the the G contract at this moment. So I went with that one. So some of you prop traders are probably trading the G contract and saying, hey, the prices don't match up. I get it. Okay, because you can see right here on the continuous unadjusted chart that it's trading at 5.315. Okay. And then the March contract is trading at 3.6. So there are some discrepancies there. You trade the charts that fit what your trading style is. Okay. Go out to the CME group, identify which contract has the most volume, most open interest, where you're going to have good liquidity. Okay, let's come back to our S&P trade. All right, so our S&P trade is underway. We did take a fair value gap entry, and we're looking at the breakout entry and to add on to that position, probably right around the open. The magenta line you see here is the unfilled opening gap. Okay. And then we have a leg base zone right below it. Tie that all together. Now I'm expecting a little bit of a bounce around these areas. Okay, that's why I'm using this profit targets here. On a time-based chart, we have to keep in mind that if we do break that area, we have this big pocket of points. Okay, light volume, big price move. These often get retraced as well. Okay, but today's activity, you notice how the topping pattern looks. Okay, I think we're going to make a run at the top. Well, what I'm assessing is that we have the accumulation, we're doing the manipulation, and profit targets are always above the accumulated areas. Okay. Pretty amazing. I mean, that AMD, that little lady that put that little clip out there, she just opened my eyes to some pretty cool stuff. Okay, so we're watching this one. We're going to go jump into the other indexes. I just wanted to kind of keep you abreast of that. Okay. Now, after I get filled on the breakout trade, if I get filled on the breakout trade, I'm going to adjust my stop loss down to 69.36. Right now we have 2 micros short. We have $100 risk on the trade. Okay. Now, if that risk is too big for your trading account, it's okay. You can take one micro, that'd be $50. Okay. And if your $50 risk is too much for your trading account, maybe trading's not where you need to be. Got to give some risk. Okay. All right. So let's jump back out here. Okay, so starting with the S&P, we got the prior session's low, prior session's high. We see that we're an inside day. Okay. The Globex range is inside the prior session's range. It has not broken. Now, inside days do invite some other market situations here, environment. And zone entries are mostly preferred, but coming into demand or coming into the supply zone. Okay. What we expect is choppy, volatile markets on an inside day. Okay. Now, inside days often fill the gap the same trading day. So here's our 5 p.m. close. That's where the gap is at. Okay. Trading down 16 points. In a perfect world, we'll go down and fill this unfilled opening gap and then come back up and fill the gap here. So now we have some potential price movement, and I've already committed to that, taking the breakout trade down. We found a demand zone on the smaller time frame, and then we'll look for the price movement back up and possibly coming back up to a fair value gap. Okay, where we'll look for another short opportunity. So if you start to visualize using the information that we put out and how we look at all of this information, and this is part of the pre-market routine course. Okay, $99. We'll teach you how to utilize all of this information and have a nice little worksheet that goes along with it. So as you start to visualize what the potential trade opportunity could be, okay, you start to visualize the right side of the chart. Okay. Now, I'm not bearish or bullish at this point. Okay. I'm looking for price movement. I understand that there's risk on the trade to participate in that. Okay. And if price starts breaking down even further below 6,900, we've got a very quick drop. Now, that would have to have some news and breaking news or economic report that would shake up the market. And we really just have consumer sentiment. PMI manufacturing comes out at 945. Okay. Now, these numbers should not be delayed. Okay. Lead indicators. Now, as the administration, the current government administration has come out, they're showing some big, fantastic numbers. Okay. And Bureau of Labor and Statistics, BLS, is still catching up from the government shutdown, and they have new leadership at the BLS, which is being held much more accountable than the last leadership of the Bureau of Labor and Statistics. So numbers are going to be showing, and you also got the wink, wink, nod, nod when President Trump was kind of holding up all the accomplishments that have taken place and what has been done by his current administration. Okay. Look, in any administration or any government, don't fight what the president says is going to happen. Okay. So we're looking for the fake left, and then we're looking more on the bullish side. Okay. All right. We have a very similar topping pattern. Okay. And this topping pattern here, as price has been accumulating, going sideways, and accumulation for me is when we have minimum 3 touches of support, 3 touches of resistance. Okay. And that area right here of accumulation. Okay. And just connect the support and resistance areas. Okay. This is where orders have been filled. I mean, after all, a price chart is the filled orders, right? A reflection of the filled orders. So price dropping below this area, getting that liquidity sweep or liquidity trap If price starts coming back up, it should move through this area fairly quickly. Okay, looking to take out the highs. Okay, a quick little drop on a daily chart on the NQ. Okay, would get back below the 50-day moving average, which could be a little bearish. And people kind of getting that punch in the tummy type feeling. Okay, that the market's going to go back down. Okay. But as we start to look at where the opportunities are, if they're going to pull a fast one on us, which they try to do, I mean, that's why we get the accumulation, manipulation, and then distribution. Okay. So understand what that picture is. We do have a pocket of points if some of the economic information is not favorable. We could drop down to about 25,243. We'll look for some buyers around that range, okay, in a buy territory. I am more bullish on the NQ. I think what did we get? We get another. Oh, we got a second. Okay. So I got my second contract on nat gas. We got two possible areas. Just got that, and our stop loss for 2 micros is up 3.694, and we got $82 risk on this trade. Okay, so 2 micros right now. Excellent. Okay. All right. I got a lot to share with you guys, but let's get some trades set up. Let's get some things in play, and we'll anticipate what we're going to do. Now, I'm bullish on the NQ mainly because of the high time frame chart. We're hanging out right at that resistance area. Okay, let that chart know that. We come out and look at the exchange traded funds. We notice that IWM or Russell, okay, has been making all-time new highs. Okay, and we've also noticed that the diamond is right at resistance as well. Spiders in the Qs showing a little bearishness. All of them are looking bearish right here at the start of the session. The Qs in the SPY looking at a lower swing high. But NVIDIA coming out, it's with that information. Actually, China came out with the information that benefits NVIDIA and their chips is all part of the current administration's pushing of policies and economics and stuff like that. Okay. So things are coming together and looking really kind of explosive to the upside. Now, that doesn't mean we're just going to go straight up. There's always that phrase we have to keep in mind, buy the dip. Okay, so when we're looking to buy the dip, things are going to look a little bearish, a little scary. Okay, markets are going down for the dip. Okay, and we want to have a good buying opportunity, buy low and sell high. Okay, so let's see, natural gas is underway. Crude oil. Okay, we're in crude. We have a wide Globex range on crude. And when we talk about the Globex range and we compare it to the daily ATR, I might be taking a little heat on this one. Heating oil just started shooting up. Instead of taking the heat, I'm going to take a $32 loss.
Order filled.
And I'm going to look for an entry to come back down below $60 or 61. Just use a round number. Then once I'm filled on that, I'll come back in and place protective stop loss. Okay. Look, heating oil tends to lead before crude oil. Okay. And if heating oil is moving up, I don't have to sit there and take my loss. Okay. I do have a protective stop loss in place, but if I have other evidence outside the price chart that says, hey, you know what? Things are not lining up, I could take a smaller loss. I'd better take $30 or $34 loss than, going all the way up and taking the 60. Okay, don't let the ego get in the way. Okay. Especially in presenting and trading live in front of folks. The ego does get in there and it's like, I've got to stand my ground. Everybody got in the trade. It's not, look, it's a click of the mouse. $34 risk or $34 stop out, and then just look to get back in once the trading idea starts to manifest. Okay. The Dow. Okay. Let's make a quick adjustment. We're about 3 minutes away from market open. We can already see that the Dow is coming back down to the unfilled opening gap, which is what we still expect on the S&P and NASDAQ. Okay. And okay, so we got that. We got Globex low. Keep in mind, if price starts breaking that 49,200, we have a big pocket of points. This should be a pretty fast move. It may be around the economic reports. Price dropping to find the buyers. Well, where are the buyers? Well, the buyers are located in a buy territory. We have a small buy territory and we have a big one. Okay. And if you look over to the left, I have this area highlighted. This is where we have that dead space. Okay. And we have this pocket points. Notice how price just ripped right through that because all the orders were filled. Okay. A lot of information on these charts that once you know what you're looking at, it makes it a little easier for you to understand your risk on a trade. Okay. Potential risk. And utilizing that, if price starts to fall, we would look below that accumulation area, which you stretch it across, we would look for the buying at the origin of a strong move up and below the accumulation area. Okay. As far as the YM, we see that our Globex range is now wide. We're right around that 50%. The daily ATR on the Dow is at 613. Okay, so more choppy. Of course, it's an inside day. Inside day on the equity indexes, the better trades manifest towards the end of the London session. Okay. Right now we're in that manipulation phase, which is a little more difficult. Session open, it's a little more whipsaw. We take very small positions, very small risk during that market phase. Okay. Well, look at that beautiful manipulation to the downside, and now we're starting to get a pretty good bounce off of that on a small time frame. Okay. Now I'm not going to be able to. Whoa. What else? We had okay. I'm gonna turn off the video. It takes up some of my resources here. Okay, so we're in. We got natural gas starting to show positive. The things I also mentioned is the agricultural products. Okay, it's middle of winter in the U.S. Okay, and agriculture products tend to start rising seasonally during that time. So corn, wheat, soybeans, especially soybean meal, which we have a lot of interest in cattle. Okay, cattle farmers out there, they have to buy a lot of soybean meal to feed the cattle during the winter season. Okay. Okay, so we got the Dow. Let's adjust this one. We're looking for that unfilled opening gap on the Russell. Okay, looking for prices to come down. Let's see if we have a demand area. It doesn't look like I got the Russell set up in time. And let's look at the indexes together. Yeah, Russell just filled the unfilled opening gap, and so did the Dow. We're still waiting. NASDAQ's going to go in a different direction because of NVIDIA. Should come back. And S&P also has NVIDIA on it. Okay, let's go back to our trade setup we had on S&P. We're still in it. have not been stopped out. Look for that unfilled opening gap. Still have that target. Nice thing about using a fair value gap entry is that you get a good sense of where your risk is, and then properly sizing that position is a big deal. Okay. Now we've had, if you look at NVIDIA and Apple, which I have over here on the side, on an inside day, you probably are going to notice this a lot. NVIDIA and Apple are going to go opposite directions. That just means things are going to still remain choppy. Okay. Inside days are choppy, designed to take your money. Okay. They're not easy to trade. So when we recognize that the equity indexes are an inside day, we notice that type of environment. Okay. And we plan accordingly. We take smaller position size. We look for zone entries and we don't take breakout trades on inside days because they often fail. You get a little break to the upside and it whips you right back down. Okay. Let's take the down. Oh, wow. Goldman Sachs is down $30 on 400 shares, 400,000 shares traded. That's pretty big. Okay. So let's take the number of Dow stocks that are negative over 94 cents, and we got 7, and the ones that are positive, 1, 2, 3, 4, 5, 6, 7, 8, 9 positive, and 7 negative. That leaves a 2 positive. We take that 2 and multiply it by 2, and we get positive 4. So cash equals positive 4, and futures are trading at negative 13. Okay, so this is a good scenario. Futures oversold relative to the cash market, we look for a demand zone to go long. Hence, we're talking about the manipulation phase that we're in. Okay, difficult trading environment, inside day, all the things that we're going to be talking about in our pre-market routine. All of these are things that you need to study. And the first phase is become aware of them. Okay. What often happens with great traders is we get too caught up in the things we already know. It's intuitive to us, but they're not taught to the newer traders what we're looking at. Okay. What are we looking at? What am I looking at to make these decisions on whether I use a large size, small size, understand the conditions will be choppy or whipsaw? What do we really look at? How do I use the cash market? Because the Dow Jones index is the only price-weighted index. Okay. A price-weighted index, we're looking at each one of these stocks having an equal weight. The S&P, the NASDAQ, and the Russell are market capitalization weighted index. That means the larger market cap stocks move the index more than the smaller market cap. So we use the cash market, Dow, we take the number of Dow stocks that are positive over 94 cents or negative over 94 cents, and we net the result. Multiply that result by 2 for the S&P to get you a value of cash. Futures follow the cash market, okay? And for the Dow, we use the value 20. Multiply the cash value by 20 points and compare it to what the Dow is doing. Now, if futures are oversold, we're looking for price to come in a demand zone. If futures are overbought, we're looking for them to go into a supply zone, okay? Futures are oversold right now. We already know that we're in a manipulation phase. So we're looking for that buying opportunity, but decided to participate in the potential of a short trade for that buying opportunity. Now, that does make the risk environment more risky, doesn't it? Okay. It makes it a lot more risky. And what do we contribute to that? Well, we're an inside day. This environment is more risky. Okay. We also notice that gaps often fill. It already filled the gap this morning. Okay. It's going to shot right back up. Okay. Gaps often fill the same trading day on an inside day. Okay. So when you start putting these little nuggets of information together, pieces of information, you need to know what it looks like. You need to see it working. You need to keep documenting it, and it doesn't happen overnight. Okay. It does take a little bit of time. Okay. All right. So let's come back over to our S&P. Okay. So we're looking to add on to our position here at the breakout. And remember, my goal was once we add on to those two positions, we will then adjust our stop loss order. You still have risk on the trade, even though we're showing some positive. That doesn't mean the trade is going to end up being positive. Right now, it is. So nice job. Yeah, this is quite amazing what we put together there. I mean, the pre-market routine, well, it looks like I got filled on that. I need to get my stop loss in place. Okay. Net gas. Woohoo! Nice job on that gas. Okay. So if you're seeing how we kind of put the information together, okay? Things outside the price chart as well as things on the price chart. Of course, things on the price chart are telling us exactly where to enter the trade based on whether you're using a fair value gap, where you're going to place your stop, or if you're going to use a leg-based zone. And in this case, we started with the fair value gap. We knew the session open would have a little more whipsaw. Okay, and it did. It went up to the leg-based group of candles. So we had two places where we were entering and where we're going to manage the risk. Oh, I see Miss Faye's in here now. Hey, great trade on the nat gas yesterday. Great call. I just wanted to give you a shout out on that. I think you did an amazing job. Hopefully you took that move to the downside. I'm pretty proud of you. You're doing absolutely amazing trading that gas and crude oil. Beautiful job. Hopefully you did the happy dance, you know? All right. Now, with all the topping patterns that we're looking at on the equity indexes, notice the gold has a very similar pattern. Okay. We had the accumulation, we had the manipulation, and now we're starting to see that price is moving back up into that accumulation area.
Fill.
Whereas we'll look for price to go up a little bit higher. Okay. Okay, so S&P. What did we just add on to? Hope I got stopped out or something here. Got natural gas. Oh, I got stopped out of crude oil. Sorry. All right, so I'm not done with this trade. I'm just going to look for another opportunity. We're in a supply zone, but I didn't want to take a lot of risk. Okay, so we'll wait for a fair value gap to present itself on crude oil. And with all these filled orders here on nat gas, this range where we connect 3 tops, 3 bottoms, okay, this is profit potential, and I'll look for my profit target to be below this dead space. I'm going to color this a little different color so we can see. I still have risk on the trade, but I'm looking for a faster movement of price through what we call the dead space, where all the orders have already been filled. You've got to go down and find that fresh stack. And the profit target is a nice distance away. Taking a long entry or a short entry inside this area is elevated risk. Okay. All right, NASDAQ, a lot of volatility. NASDAQ is still in that dead space area. Okay. NASDAQ has filled the gap as an inside day. We have a fair value gap on top. Now I'm going to shy away from trading inside this range. Okay. This range can often be very high risk. If you choose to trade inside that what we call the dead space, there is a fair value gap, 25,658. I recommend taking a very small position. Even better, wait for price to come and find a demand zone and then take it back up through it. Okay. Let's take a quick look at the there we go, exchange traded funds. Oh, diamonds. Let's keep an eye on that one. Where's our Dow at? Okay, Dow is getting close to going inside that range. We are 2 minutes away from an economic report, where the economic report's pretty positive. Remember, Bureau of Labor and Statistics is now catching up. And if you pay attention to what was being announced yesterday at Davos, things are pretty bullish, okay? But I don't have an entry, okay? And that's the whole point is, yeah, we're looking at a bullish price move and bullish information off of that economic report, but we need to find a way to get into the trade. And we have that pocket of points, which could scare a lot of folks in the market if price drops back through to find the buyers down below, okay? But we're still part of that manipulation. And as the Dow starts out, we're going to have to find a way to get in. We might have to use that fair value gap. Okay, so a planned entry on the Dow, looking to go long 48,985, stop loss 908. Okay, but if the economic report comes out bullish, and we see our location where we have the accumulation, we got the manipulation, we're looking for price target to go back above this area. Okay. How would we get into that? Well, we got 10 seconds left to finish this candle. We would need another 5-minute candle or 2 more 5-minute candles in order to form a fair value gap. Okay. So you might see a good bounce at this area, but it's still going to take another 10 to 15 minutes before we'll have an entry. Okay. So we need a fair value gap to be created. Now, if you're using a smaller time frame, just use the same parameters. The purpose of using a fair value gap and that planned entry is to manage risk on a trade. Okay, and know your risk ahead of time. And not a lot of sparks from that. Okay. Let's go back over and look at Russell, see where they were at on that. We do have that range right there. Okay, we're still a little bit of time away. We do have a leg base entry, or you can wait for a little more confirmation. Okay, with the fair value gap entry. NASDAQ. Chop, chop, chop. Inside day. S&P. Still chopping. Now, when we notice that the Globex range is still inside the prior session's range, often the better trades are going to happen near the London session close. London session closes around noon Eastern. Okay, so We know that the banks and institutions complete their order flow between 8 a.m. to 11 a.m. Eastern. And we've documented many times that the better trades manifest on the equity indexes between about 10:30, 11 a.m. when we're on an inside day. Now, since it's an inside day, we're looking at entries based off of using a demand zone, a leg base, or using a fair value gap around the 10:30, 11 a.m. Eastern time. Okay. See, it's like I'm rattling off a lot of rules and things. But if you document this every day, it's like approaching a crosswalk. Okay. So a crosswalk that you've gone into the intersection every day for, a year or so. Okay. You know whether to look left or right, whether the traffic's heavy or light. You know what time of day the traffic's usually heavier or lighter. Okay, you have gathered a lot of information about that crosswalk and the different times of the day, even weather patterns and time of the day, how they all correlate as you assess the risk of engaging in that crosswalk. So kind of look at it the same way. Okay, it doesn't happen overnight. Okay, the first several times you had to have your hand held while you're crossing the street. Okay, some of you may even have some remember some of those experiences. Okay, all right. Now, I haven't been filled, so my stop loss is still up at that 43 area. So once I add on the second set or the second 2 micros, I will adjust my stop. Okay, but we have created a new fair value gap where it just retested. Okay. Once you start to recognize a fair value gap entry, a breakout trade entry, a demand zone or supply zone entry, you start seeing how these things are manifesting, how they're being put together. Really quite spectacular. And I think, in the trading world now, I've watched a lot of development going like on, these market gurus, the startup ones, the one-time wonders that come out. They do have some great strategy and they do impress the heck out of people with having, some wonderful big number on their trades. And they may get a few followers that do the same, but nobody's really teaching. I mean, look at all the things that we have taught this morning about the pre-market routine and given you a good understanding as to why. And it's not to discount those traders because they're doing pretty good. They got the numbers to back it up. Okay. But can they teach? Can they help you get to that level? Because they have a lot of experience. Okay. Inside days, we're going to notice a lot of this choppy action. Okay. And this is why I'm teaching a lot more because on the inside days, we see that. Okay. Wow. Did anybody take that natural gas entry? Swing. Yeah, it's tough for, somebody gets excited, even myself getting excited about the markets, um, to talk slow, walk you through it. But once you have a good understanding as to why things are happening, you can then assess your risk a lot better and the potential reward. Okay. All right. Abdallah, you got into that one? Super job. All right, what do we got going on gold? Gold's pushing right up through that dead space. This is what we anticipate in the equity indexes a little bit later. But we got to find a way, in a perfect world, price will come down on the NASDAQ down to a level where we can accumulate and send it back up. Okay. Russell continues to go a little bit lower, never has not created a fair value gap. The Dow in the same camp, although it's in a fair value gap on a 5-minute chart. Let's come back to the Dow. And another thing, a heads up, why do I watch all the indexes together? Well, on inside days, they don't often all correlate. And NASDAQ's got some good news for NVIDIA, a big, large market cap weighted stock that's holding things up. Okay, while Apple is not participating with that excitement. Okay, and it's just chopping sideways. The Russell, based on has a lot of the big national regional banks in it, and with a big drop on the Goldman Sachs, the Russell's being dragged down. Okay. And we'll probably see a lot more volatility with the Russell if the money system starts to change and they get more into the crypto versus the fiat currencies and so on. Okay. National regional banks are in a lot of trouble. Okay. The Fed has been, the repo and reverse repo markets out there have been pumping money in, printing money, and it's a real mess. Okay. Now notice the S&P and the NASDAQ right now, they're just kind of chopping sideways. And we still have risk on that S&P trade. Okay. The Dow and the Russell are showing very similar price patterns. Okay. They have not gone into the pocket of points, and we need to go back and look and see if we formed a fair value gap on that 5-minute chart. Now, we still don't have an entry. I have one down. I have a planned entry at a demand zone, lower. My profit margin or profit potential is going to be above the Asian session. Okay. Looking for at 49,700. And by the way, this week we've had, I think, Silk Stockings in here on Tuesday, took over a 300-point move up on the Dow, and I took like one that was about 350 points. I mean, they were great trades on the Dow. Okay. But we had a proper entry and proper risk management. And at this point, we can assess our stop loss is going to be at the low point, but we still need time to create a tradable entry. Okay. And the point move was spectacular on those trades. Okay. But we had a very good entry. Price dropped into demand, or it created a fair value gap to get that turned back up. If we get that fair value gap in that entry, we may start off with just one micro contract because of where the stop loss needs to go. Okay. But the potential, and we're at 49,300, and we're looking at almost 400-point move back up once we have an entry. Okay. Okay, Nat Gas does have a fair value gap. For those that are participating in that, if they're willing to add on to a position, that's where we're going to add on at 3.584. But your stop loss is going to be up there about that 3.634. Okay. Topping patterns and bottoming patterns often have the biggest swings up and down. View on silver. Yeah, there's a lot of drama on silver. Let's take a quick look at that. Silver is not easy to trade because it has big point swings. Okay. So I have to be very confident, and I take very short-term trades on silver because of it's $5,000 a point on just the regular contract, and it's $10 a tick on the micro. And if you trade two micros, even though you say it's micro, you think it's really small, this thing moves crazy. Okay. So my view on silver is we're experiencing some interesting times. The chart patterns are the same, but I cannot handle the risk. Okay. The risk is too great. That's my view on silver. Okay. Where it's going, we can take whatever time frame charts that you're looking at, and we can do some swings in price. Let's jump out to micro silver is SIL. The I guess the best way to look at silver, let me see if I can bring this up here. This is something to uh, keep in mind. Okay, kind of a way to forecast. Okay, so you got the US Mint, the official US Mint. Okay, go out to the US Mint and look at how, let's see, look at where they're pricing silver. Right now, the American Eagle, 1 ounce silver, and even the Morgan Proof, and they're at $173. Okay. Well, what's silver trading at? 99. Right now, the spread is so wide. You're paying almost what do we say, 99? Yeah, you're paying almost a $75 premium on silver. That's crazy. For the last year, 2 year and a half, 2 years, there's been a $5 spread. Okay. And now it's jumped up. Now, this is just on the US Mint. So if that gives you an idea of where prices may be going. Okay. So that's a very visible place. Okay. People are spending $173 an ounce to buy from the US Mint. Okay. Now, there are a lot of other websites out there that are selling it a little bit closer to the spot price. Okay. But I would say over the next year or so, you're probably going to see those numbers. I mean, I refuse to spend a $5 spread on silver.
Order filled.
Oh, looks like we got stopped out of S&P. Yep, moving up. Let's get back over to the Dow. All right, we got it. We still, ooh, wait for it. You got 4 minutes left. We just have a fair value gap on the Dow. Remember, no breakout trades. NASDAQ popped up. Russell's not there yet. So to get a good understanding of the Russell, take a measurement. This little chart up here doesn't do much, doesn't produce trades. By the way, I did lose $100 on that trade on the S&P. Okay. Still have the breakout entry. And we'll wait for the next one. The BKX. The BKX is made up of 23 national regional banks. It's the bank index. You want to follow the banks. Okay. So the Russell has a very strong correlation with the national regional banks. So the BKX is a good indication that of what we might be planning or looking for on the Russell. It's dropped down to a 5 minute. Okay, so a 5-minute chart is showing that we're still about 5 minutes away from completing a fair value gap where we might see a potential turn back to the upside. S&P has a bearish fair value gap. We're actually looking for a zone entry. And that gas getting some volatility. Crude oil. Still not looking bearish at all on heating oil just yet. Although I think I'm going to take a shot at this one. Let's see if we can get the picture right. We have a leg base group of candles. Stop loss would have to be up around that 61.50. Okay. Okay, so as I'm looking to set up this trade on crude oil to go short, the timing's not right there yet to enter unless I want to take a confirmation entry after it breaks 61.01. Okay. Let me set up I'm going to set up an alert. If it breaks 61.06, it'll bring me back. At least it'll kind of scream out to me. Go back and look at that. Okay. And here comes that gas coming around the far outside profit target, 3.434. Just had another, if you wanted to add on to that, you had an entry at 3.584 and the stop loss up at 3.632. Okay. S&P coming up to a fair value gap. 1, 2, 3, 4, 5, 6 Dow stocks positive and 9 negative 3 times. So net result is -3 times 2. You should be at -6. And right now we're flat. See, on an inside day, as the indexes are right now, the indexes are going to be a little more tough to trade, okay, until a little bit later in the session. Inside days often get these big whipsaws, okay? And the more that we understand that, the YM is still creating it. Oh, it took it out. Yeah, that's why we wait for the candles to complete. Excellent. Nice job. And Russell continues to go lower. Let's see where we have it. Ooh, Russell. All right, I'll get the leg base. All right, so the leg candles leaving the zone are smaller, so we should have a proximal line entry. Price should not go too deep into the zone. Yeah. And we're going deep. Proximal line entry, we got to bounce. Okay. So when you understand and utilize the leg base group of candles, you have a proximal line, the first line closest to price. You have a distal line, one furthest away. Okay. Kind of helps expose the risk. when you use a leg base group of candles and the leg candle leaving the zone is smaller than the leg candles in the zone, you often get a proximal line bounce. Okay. But if price starts to come back deeper into the zone, it will often go through it. Okay. So what we do with that information is we recognize the zone, we recognize what's going on with the leg base group of candles, and you can participate in the proximal line entry. Okay. Catch a bounce. Still an inside day. Oh, we had broken the inside day. Yeah. Okay. Wow, what's the banks doing? Now I don't have a place to go short or long. And sometimes you have to really know your entry and risk management rules. Okay. Because price can keep moving in one direction and you may not have a place to enter or apply the trade. Okay. But boy, do we beat ourselves up for the fear of missing out, the FOMOs. Okay. Oh, why aren't you short? The market's down. Look at lower. I mean, you try to justify it in every way. But if you don't have a way to execute on the trade, like I had a place to go long. Okay. That was the only trade set up. Okay. And we also have a fair value gap that I wasn't willing to take the trade short because of the other information we had gathered outside the price chart. Okay. You could see the fair value gap worked out nicely. But you have a fair value gap, and then you have a demand zone just below it. There's not enough profit potential. It's got two different obstacles going. Okay. I know it gets frustrating. We're now in that pocket of points. Just want to reset. Do some studies. Yep, it's set right. Okay, so we'll look for the opportunity to go long around 26.75. We'll look for some buyers here. Let's see, we've got S&P. Entry, Dow. Okay, we're starting to see a little weakness on heating oil. Still no entry on crude oil, at least on a 5-minute. But I am liking the potential of a short because of what I see on the 60-minute chart as well. That gas, being that gas, whips all the way around. Gold. Ooh, Qs. Looking to break out. Let's get over to the NQ. Just chopping sideways. I am more bullish on this, but I don't have an entry to go long, especially in that accumulation area. Our internals. Well, with the market, the trend is low. Trend low, time to go. Okay. If the markets are moving higher, they're selling into the up move at this point. But also notice the tick Q, the cumulative tick for the NASDAQ, and the tick, which is a cumulative tick for the New York Stock Exchange. We have not been in a buy program or a sell program. And this should temper the FOMOs, okay? Along with not having a proper executionable entry, okay? Is if we were seeing cell programs buy programs or sell programs kicking in, we would have a lot more volatility, but it's just going back and forth. Okay. Part of our pre-market routine course is I explain each and every one of these things as we go through, and we utilize them like a dashboard in your car. Okay. In your car, you got the temperature lights, you got the gas gauge, you got all sorts of bells and whistles now, but they tell you how the car is running. Okay. When we have advancing issues over declining issues on the NYSE, we're in the middle of this range. We're not at an extreme. Okay, let's get, what time is it? A quarter? All right. Yeah, I'm going to take a shot at this.
Order filled.
Just starting off a small position. I'm going to keep my stop loss 61.26. I'll just go to the high of the session. Just a couple more pennies. Okay. $58 risk. I'm going to give this another shot as we see that heating oil now is dropping. And you notice that if you're following where that winter storm is at, okay, they gave you a window and you only got 2 more days. 2 more days left. And let's take off that alert. A nice little pocket of points. You notice how big green candles right before the pit opened just shot right up. And if you go over here and look at the volume on that, very light volume. And that can be a pretty strong lesson in itself. Okay. Is that when you see these big green candles on an intraday basis or big red candles, is go over and look at the volume. And then you start to get an understanding, well, those big green candles and big red candles, there's very little volume in there. But everybody's going to say, oh, the perception is everybody's getting in at that point, when it's exactly the opposite. All right, how we doing with the NQ? Still in the range. Dow, no buy signal yet. Russell, got proximal line bounce. And the details of why that happened are way over here on the left-hand side of the chart. Or let's just say there's a picture over on the left-hand side of the chart where the leg candles leaving the zone are smaller than the leg candles in the zone. Tells it the zone can only be used one time, and it is a proximal line entry. Okay. And if it starts to go back into the zone, it will usually fail it. And that's what we've seen. Okay. Now, if the leg candles leaving the proximal line are bigger than the leg candles in the zone, then that zone can be used twice. And that's often where we'll see a little double bottom or chart pattern of that and such. Okay. We have some extremely high quality details that can help you validate the picture you see on the price chart. Okay. Especially when you're trying to gauge risk, manage a trade, and so on. That's in our Mastering the Charts course. And I believe the team has also posted some promotionals on that too. I have so much to teach you, and our next class that we have coming up, that is on February 15th, that we'll do a live class over two days, 2 90-minute sessions. You'll get the recordings and the handouts. Only $100. Okay, 99, less than $100. Okay, if you sign up early. our usual price for this course is about $3.99. And this is where we'll go over in great detail. What is an inside day? Why do we talk about it? Okay. What do we do with the other parts of our prep? Why do we look at the news? Where are our demand zones and supply zones on the larger time frame? Why did I write all this stuff about what's going on in the market? And I don't feel like uh, it's I'm writing an article. I'm just kind of expressing what I'm seeing based off of the information collected. Okay. Why do we not trade very heavy or big positions on an inside day? Well, because inside days have been choppy, designed to take your money, often whipsaw. Okay. And there's a lot of those details that we'll be bringing out. So look forward to seeing a lot of you there. If you've already taken that and want to take it again, just reach out to the team and we'll get you set up. I think they even have a special discount for retaking. All right, expecting S&P. We look at that. We do have a small fair value gap. NVIDIA is being pretty quiet here on a 5-minute chart, and we're seeing Apple also. At least things are starting to balance out. We're seeing a small bounce up on the bank index, but the Russell is also not showing us that there's accumulation coming in yet. Okay. All right, let's come back out here. Inside days, it just takes a little bit of while to let the market shift out. Now, in general, most of the professional traders, that come out and they'll say, "Oh, I'll just wait for the first 30 minutes of the market to open, first hour, and then make your day." Okay. Well, that's all well and good until you start seeing the days when the market just goes ballistic at the open. So how do you know when it's going to be a choppier condition, when it is going to be an easier trading environment? Inside day, outside day is one of those techniques that we utilize. And because we've documented that so many times, we started saying, okay, well, when did the good trades take place on an inside day? And between about 10:30, 11 o'clock is where we see that. Okay. Now, for anybody that's watching us on YouTube, if you would like to participate in our course, or not course, our class, we have a Mastering the Charts recap and review session on Fridays, just after our live trading room live stream. Reach out to the team at the marketinstitution.com. You could even type it in the chat if you want to get an invite to that. We can certainly email that to you. Okay. And that's where we'll go back over our last 3 live trading sessions, and we'll give you the pictures of the trades we've taken, the charts, do a recap, and we also continue to trade during that time. So if you'd like to get a look at that and kind of see what we've done for the last week, admin at themarketinstitution.com. You can reach out to them or type in the chat that you would like a link for that, and just present your email to the team and they can get that to you right away. Okay. Kind of sprung that on the team at the last minute, so be patient with them. All right, what do we got going on crude oil? Okay, a little bit positive. Stop losses in place. Nat gas. Lots of volatility. I still have my stop loss up at the top. Okay. Now, another thing, reminder or remembering of the inside day, okay, especially on the equity indexes, is that if you choose to take trades before the 10:30, 11 a.m. Eastern is short-term profit taking. You don't often develop a trend during an inside day between 8 a.m. and 11 a.m. You just get a lot of chop, okay? Also like to reach out to, I see that we have some people listening in from Singapore, also Jakarta. So say hello to everybody out there. Jakarta's been getting a lot of flooding, crazy flooding. All right, S&P. I would like to participate in that one. Remember, small trade, small risk. I'm gonna look for it when price comes back down, 969.48. Start off with a couple micros. If you go out to a 30-minute chart, you'll see that there's a nice fair value gap right in there that we're in. And we're also coming into a leg base, leg base. I did place an order to go short once price. So let's come back down here. 69.48. A little more tricky. We've got a small size. And I'll have a small stop loss. YM turning around. Okay. All right. And we just have to see if that current 5-minute candle is going to produce a fair value gap. We were hopeful for that last one, but then it came back. Got to let that third candle complete. We can identify where our potential stop loss would be, about 49,204. And remember, the fair value gap is a 3-candle pattern. So you got to wait for confirmation of a 3 candles. Then you have the range and where your risk parameters are. Because if you try to get in now, or when 2 candles are forming, you know, you could get whipsawed right out of that. Because I tried to do it myself. Inside days.
Order filled.
All right, got about 3 minutes left in our session. And again, if you would like to go to our Mastering the Charts recap and review, let us know in the chat. And the team will pass you a login for that. It's another Zoom session and we start that 1 hour after this session. All right, let's get my stop loss in place, 69.52. I'm still looking, we do have the potential for a breakout trade still on this. 69.24. And we still want that unfilled opening gap in the zone. So these will be our profit targets for this move. Oh, the bank index is slipping again. That must mean the Russell's going to go lower. Russell's utilizing the fair value gaps to downside. I'm just not willing to jump in on it yet. So I'm waiting down below on the Russell for us to get to demand. Oh, that's why we wait, right? That third candle just couldn't do it. Start all over again. Did you get a little move off of that? Inside days, always a little choppy. All right, NASDAQ, it just broke the Globex high. This could be anticipated as a liquidity sweep. And price breaks the prior session's high, the Globex session high. We're also coming into a fair value gap area. A lot of risk, about 60-point risk on the trade. That's outside my trade plan. Let's see what we have on the smaller time frame. Yeah, we got another range up just a little bit higher. All right. Well, hey, we're going to wrap up our session. If you would still like to attend our Mastering the Charts recap and review session, okay, we're going to continue to trade over there. And we're also going to do a recap of what we've done this last week in our trading. Okay. So I wish everybody a happy Friday. Be careful with the inside day, the choppy market conditions. Take profits quickly until we break outside of the prior session's high or low. Then we can look to stay in the trades a little bit longer. All right. So have a great Friday, and we'll see you in Mastering the Charts recap and review in about an hour's time. All right. Great day, but have a good day.